Reading the mood of where market is heading can allow you to capitalize from the changing direction. Mood of market can also be called market sentiment. In general, market sentiment means how investors feel about the market. This term is used for investing mostly, but it also could be interpreted into trading in ever so slightly different way. Market sentiment represents the mood of financial market and the general feeling among traders. Understanding sentiment allows you to judge whether the market is feeling optimistic or pessimistic about the prices of financial assets. If the market feeling positive and optimistic about the outlook, then market will rise, forming an uptrend, and the pessimistic market forms a downtrend. In addition, while the majority of the market will lean on one way or another, every participant holds their own view on why the market is performing the way it is and where it is heading next. While the opinion of a majority often dictates the overall sentiment towards the market, there are likes of contrarian traders who bet against the dominant sentiment. When the market is optimistic, a contrarian will take pessimistic view, for example, and that will lead to losses, of course. Sentiment will differ depending on the market, and in some cases often correlate with one another. When bullish sentiment starts to surface in one market, bearish sentiment can emerge in another, or vice versa. Volume can be one way to evaluate how markets are feeling. This is particularly true for stocks and options, as it can point towards a rising or falling interest. If company's share price has continued to rise, but volume begins to drop off, for example, then this could be indicative of weakening sentiment. Market mood are identified by analyzing trading chart. So this depends on your trading style and strategy which time frame to analyze for market mood identification. However, it doesn't mean that you have to forget about bigger time frames. Most important hours are first few hours after market opening time and represents trading environment for this day. Because sometimes, before market opening time, there was not enough volume to see what kind of mood it is. After market opening, past some time, we can make conclusion from moves of price what kind of environment it is. Especially at United States market opening time. Into the markets goes huge volume, and that could influence market quite heavily. So these times should be marked and not be tradable at least few minutes before and after. Same goes with European market opening time. However, there are markets, like crypto, where there is no opening time, and you can make trading decisions around the clock. But even then, United States and European market opening time should be marked and avoid to make trading decisions. There are 4 modes of markets out there in total: trendy market, side move market, hectic market, and floating market. So let's begin to analyze these types of market environments. Trendy market. When market trending either up or down, that is called trendy market. A price series that continuously closes either higher or lower, on average over a defined number of periods, is said to be trending. An upward trending market is one that may fluctuate up and down, but on average tends to close periodically higher. A downward trending market periodically ends lower, regardless of interim moves. A trending market can provide multiple trading opportunities for traders and technical analysts, and it is a great trading environment. Traders will chart the price pattern of a financial asset to identify trading direction for placing trades. Trending markets are primary interest of technical analysis. Technical analysts believe that trending markets occur with some degree of regularity and predictability. Traders use various patterns and trend lines to identify trending market direction and trading signals for a single security. A trending market can be classified as a fast or slow going. Either fast or slow, better action is to follow them and take trades into them. Especially at the beginning, it's recommended to follow trend and do not trade against them. When you don't know the market behavior, when you're not familiar with it, it's really dangerous to go against the current, so to speak. Might be many negative trades, and it will not feel so good. So mark that and keep in mind all the times. Unless you know what you're doing, familiar with the market real well, it is not against your strategy or approach, sure, you can go against trend. But for that, you must have quite enough experience under your belt already. Let's take a look at the market for trendy environment. Remember I mentioned, you have to identify mood of a market at your trading chart, the one we are looking for in entries. My trading chart is 5 minutes time frame. Therefore, at your screen right now is Dow Jones 30 futures market at 5 minutes time frame. Great example of trendy market. Firstly, market was flat. Seems like nothing is happening. Then, market produces big movement upwards without pullbacks, continuing forming higher highs and higher lows. Why there was this huge movement upwards? Because of market opening time. Really great trading environment, and you can benefit from that quite well. Best thing would be to look for long entries into the market. Maybe there was some pattern on the way. Maybe you already know some strong areas where you would like to enter the market. Shortly, it is fast trending market. Let's move to the right for a bit to see what was happening there. Market continues to be clear and trendy. At this area, as you can see, market changed into slow downtrend. Until this area, where pretty powerful move indicates potential fast trend upward might continue its movement. However, price were not able to cross higher and produces lower lows and highs. In general, clear trendy environment. Let's move to the right once again for a bit. Market opened with strong downward movement, consolidating in a range and continuing its movement downwards. Stops again, moving in a range once again. We already can expect prices to move downwards. No signs indicating that movement ends here, until we see obvious trend changes. For this moment, direction is clear. Traders can use resistance and support lines to indicate buy and sell signals. When the price reaches the resistance area, traders can be expected to initiate sell orders. Adversely, when the price reaches support lines, buy orders would be typically initiated. There are many strategies for entering market: levels, patterns, indicators, fundamentals, and so on. Main thing is to analyze market from different sides in order to get best possible chances for given trade to be positive. That is a key to trading success. And when you get used to doing that, trading becomes really simple. However, to master it, you need a commitment, a lot of practice, consistency of approach, discipline, and one day you will get where you want to be. In conclusion, when market moves with clear trend either up or down, slow or fast, that is called trendy market. Great market mood for trading. Just keep in mind that you still need to follow bigger time frames to see what is happening there. Market mood is your expectations of further movements. Side move market. Market environment when market trading between certain range without huge movements. Side move market are the only market for which identification need to use trading chart as well as slightly higher time frame. For example, if my trading chart is 5 minutes time frame, then I'm going to look for a side move environment at 15 minutes time frame or at the most hourly time frame. Side move market to be side move doesn't require any strict support and resistance lines. It can be traded in a range without them. There are situations where not possible to draw these lines, because market is hitting there and there, not in the same area. But if market moves in between strict support and resistance, in a channel so to speak, it's even better. You can identify that kind of market condition from a past few or 3 days, as well as from the past few hours. But you still need to pay attention on market opening time.
If side move was already in place, you might expect for that to continue at some point. Just keep in mind that market will move in one way or another eventually. But what is side move at my markets? And why these kinds of things happening? Generally interpreted as market indecisiveness. Periods of indecisiveness can be found in any market for any time interval. And these periods can last for days, weeks, or months. But for us, most important is to identify mood of market. Therefore, we are going to use trading chart. Of course, side move periods can last for weeks and months at bigger time frame. But in short time period, happening many things. However, sometimes even at trading chart, side move periods can last for weeks. Usually technical traders look for support and resistance levels in price chart and then use these levels to make buy and sell decisions. A side move market could be broken for several reasons, such as release of material important news, or the triggering of a succession of limit orders, and many more. Let's get to the chart and identify that kind of market condition. On your screen it is DAX 40 futures market at hourly time frame. Uncertainty in the market is happening all the time, and it is so obvious to identify. Firstly, we look at bigger time frame to confirm where the market stopped and moved sideways. So I marked quite a few areas. First, between two red vertical lines, market stopped trending downwards, but it doesn't move upwards either, until huge gap appears. Then, between two vertical blue lines, longer side move, until upward movement proceeds again. Let's move to the right. Another three areas of uncertainty. First one is so obvious to see. Market moving sideways until the big movement breaks the price downwards. Market moving downwards with moderate trend. You still can identify side move market on the way down, especially with 15 minutes and 5 minutes time frames. Anyway, here is another pretty long side move with strong support area from my first side. Let's switch to 5 minutes time frame now. Before market was in downtrend, until we received signal in opposite direction. However, not for long. Price turns around and again tests the low area. From this moment it is clear that market is in an uncertainty period. Therefore, I'm going to look for trades in between this range, from 17,762 to 17,662, roughly 100 points range. Market continues to be side movish until huge gap appears, and market conditions change. Let's move to the right. Here we go. After strong trend up, market stuck in a range, test the high once again, but didn't cross and fall downwards. We might think that new downtrend might come. However, same uncertainty, moving here and here for some time until finally breaks upwards, reaches another side move period, moving in a range until breaks downwards this time. Another side movish area with range between 18,670 to 18,590, roughly 80 points. So in this way you have to identify side move market condition. You might think that 100 or 80 points is not enough or low to benefit, but you are so wrong. For example, even 50 points to take for a profit would be considered a great trading day, especially if you are trading with full futures. Another thing to mention, do not expect to take full range of side move for a profit. 50 to 60% is optimal number, and way bigger chances for trade to be positive. Mark that and keep it in mind. Let's quickly recap how to identify side move market mood. At bigger time frame, market should be stopped and started moving sideways. If your trading chart is 5 minutes time frame, then you should look at hourly or 15 minutes time frame, but not higher. If your trading chart is 1 minute time frame, then you should look not higher than 15 minutes time frame. Or if you are a swing trader and your trading chart is hourly, then you should look at 4 hours time frame or daily.
If bigger time frame confirmed, then take a look at your trading chart to see if the market produces some uncertainty or channel. Last thing, make sure that the market is not floating or hectic. And also, do not expect to take full range for profit. Thanks so much for watching, and if you found this video helpful or interesting, please give it a thumbs up. It really helps the channel to grow. And if you like to see more content like this, make sure to subscribe and hit the notification bell so you don't miss any future videos. I would also love to hear your thoughts or questions in the comment below. Thanks again, and I'll see you in the next video.